Welcome everyone to HueFin News. Today is June 16, 2019. Giving you all the news according to the charts because the market doesn't follow fundamental analysis. It doesn't care about a company's assets, liabilities, earnings, production, GDP, business performance, whatever the case may be. The only thing that really matters is what someone is willing to pay for an asset. So that's what we're going to talk about today. We're going to talk about an analyst who covers Netflix stock and how it has been the worst calls since this individual has been covering Netflix stock. Okay. Thank you all for coming to our channel. Make sure you all continue to go ahead, like, share, and subscribe these videos, because what we're here to do is to show you that chart analysis doesn't have to be confusing. We're here to show you precisely by looking at a bare chart, price, bars, and volume, that you will be able to precisely tell and accurately see what the market is going to do before it actually does it. So now, the last time we did our video for Netflix was on April 12th, 2019, of which we anticipated the market in Netflix to continue to move to the downside as well. Go back and check out our video. We do have a playlist for Netflix stocks that we cover our videos on. And here on the left side of my screen, you can see right here on this website called TipRanks that analyst Michael Palcher, he works for Wedbush Securities. He's an analyst for this particular company right here. And his main focus is on technology, internet, and media. Okay, so he should have a firm grasp as to what the market in Netflix is going to do. He covers it on a daily basis. So now, his record, according to TipRanks, is 49%. Out of 329 ratings, only 162% were successful, and on average, if you follow his ratings, you are in the negative 1/10%. Out of 11,979 experts, he is 8,128. He's ranked 3,568 out of 5,202 analysts that TipRanks covers. So right here is a list of all of the stocks he covers. Okay, I'm going to scroll down and I'm going to show you Netflix right here. Okay, so now let me make this a little bit bigger. I want us all to see precisely how this price chart has been looking while he's been covering this stock. So he has 75 ratings on Netflix. All right. Average profit on the stock is he's down 50%. 49.5% is the average return per rating on this stock, the stock that he's covering. 4 out of 20 ratings were profitable so far. Back in 2017 is when he first initiated or reiterated a sell rating for Netflix stocks. You can tell here by this price chart that this stock continues to shoot higher in price. And every time he continues to cover this stock, he always places a sell rating for Netflix, but the market is not falling. At what point will he make a change and say Netflix is a buy rating? This is one of the main reasons why one need to take their own analysis and strategy into plan rather than following some other so-called expert. Okay. So that's what we're here to talk about. We're here to show you all that the market doesn't follow analyst ratings. They are literally supposed to be in a prime position to do research, massive amount of research, and on top of that, they have the funding to back the so-called those individuals that are in the know in these stocks. So the question would be now, why is Michael continuing to reiterate a sell rating for Netflix stock when it continues to move to the upside? You can see right here, I'm going to have to stop this. You can see right here as I zoom out that the market in Netflix stock has been on a continual movement higher in price. He started covering the stock in 2017, which is right here. All right, from TipRanks. So even if I were to look and start back in 2017, let's do it around July. Let's see how high the market in the market in Nflx has continued to move to the upside. Okay, so the market has went all the way up to almost 185%, 186% to the upside in this market. All right, 190% since when Michael was apparently from Tip Ranks started coverage on Nflx stock. 190%. That is phenomenal to see that stock move such a high place, and Michael continues to place sell ratings on this stock as it continues to move to the upside in price. Okay, he should have put a sell rating right here towards the top portion of the market highs, because the market back in October, November, December 2018 did make a move lower. So now, considering the last video that we did, we also stated that Nflx stock was a sell and that it wasn't a buy. And we did that video again on April 12th, 2019. So let's go ahead and move that here. Okay, right here is when we did our video stating that Nflx was insinuating some movement to the downside. Okay, and that still stands as is. So let's see how low the market in Nflx went from when we actually created that video. Okay, so the market came all the way down to the low on this day, the 3rd of June. About 5.37% movement to the downside so far. Now, in between that time, Nflx has literally just been maintaining a consolidational trading range back up to 380, all the way down to our support line around 340. Okay. Now, as an update, we're still seeing indication that Nflx is still weak. So the expectation is still for Nflx to continue to move to the downside. Here we are looking at it on a monthly chart. Very easy to see. You can tell here that the weakness is still present in Nflx. When you move into a weekly time frame, again, the market is still giving us a lot of weakness. So the expectation is still for Nflx to continue to move to the downside. We did state that $330, $320 can be an initial support area in the market in Nflx. So we're just going to hold that there for the moment because the market can definitely try to hold some support around $330 to $320. Okay, so we're going to hold that there, and we understand that the market resistance is definitely being seen right around 370. Okay, so we're going to utilize this going forward in the market in Nflx as a gauge as to what we expect the market to do. Obviously, the market is readily weak. We might make another quick movement to the upside this upcoming work week, but overall, this market is trading stagnant, and the movement to the downside is still in play. All right, so our expectation is for Nflx stock to continue to move to the downside. Now, I can also see Nflx stock moving back down to $300, especially around this earnings date right here. Okay, that is due out on July 8th, 2019. Okay, so I would TP this simulated trade at 320, but the expectation is that it can still continue to move to the downside back down towards $300. All right, so that is our analysis. Just a very quick update stating from my last video that Nflx is still weak. We're still anticipating this stock to continue to move to the downside. So actually we are in line with Michael's analysis of what he expected Nflx stock to do. Okay, you can see right here that he reiterated a sell back in April 17, 2019, and again April 11th, 2019 he reiterated the sell again. Now he's looking for the market. Let's see how low is he expecting the market to go. So he has an underperform rating at $165 price target on the shares. $165. This was, you can see right here that this is him. This is his rating. This is his analysis back on April 11th. He's looking for $165 to the downside. All right, so now let's see how low that really is from where we are in the market for Nflx. Okay, so he has 165. So from where we are today, that's about a 51% movement to the downside he is expecting. And as you can tell, his 165 breaks this major ascending line that is up going on our chart. So that would definitely be a negative thing to see for Nflx stock. We're not getting that just yet, but he definitely has a price target at 165. We're looking at around $320 to $300. Okay, give us your thoughts, give us your opinion. Check us out at our website, HueFinancial.com, in order to get more of this information, because it's our purpose to give you all the news according to the charts without causing you any confusion. Make sure you all maintain your profitability, and I will talk to you later.